All right, so a new topic then, folks, money laundering. Not in F8 or P2 or anything like that, so key really comes up a lot. So I've split it up into 2 lectures. Get to know all of these. First of all, then, the definition. And the definition, I like to break it down into 3 things. Firstly, you need to create an appearance. So you're trying to fool somebody. Creating an appearance that, okay. Next bit, money from crimes. So anything illegal. Money from crimes. You're trying to create the appearance that money came from that came from an illegal thing, actually originated from a legitimate, a legal source. Okay, so there's the 3 points of the definition. Create an appearance that money that came from crimes didn't, that it came from a legitimate source. And then it gets a bit wider than that as well. Particularly in the UK, it gets wider. And it's that an activity that generates an asset so an activity that generates an asset from an illegal act. And that's actually a bit wider, because if you think about it, that would therefore include tax evasion, which is often what we're going to come across in terms of accountancy. So tax evasion is an activity, it's an illegal activity that will generate an asset of more tax, as is false accounting. So, as is when anybody tries to tell you something that's not true and they get money from it. Okay, so it's quite a wide thing. And it's become really important. So, once you've learned that, you think, right, now I need to understand what are the international efforts to combat this. And the first thing, well, the only thing really, is the Financial Action Task Force. The Financial Action Task Force. And that's an international body which, what it does, it sets standards and policies to try and prevent money laundering. So what are those standards and policies? Well, before I tell you those, actually, just a couple of key things. Just to show you how big it is, it's got 35 member countries involved, it's got the World Bank involved, the International Monetary Fund involved, and their recommendations are endorsed by over 180 countries. So really, this is a massive international effort. So what do they say should happen? What do they say you need to be aware of? First of all, which we're going to talk about up here, but the first thing is the scope of money laundering. Okay, it's a lot wider. There's lots of criminal offences that you might not think of, money laundering criminal offences. So it's a lot wider, so you need to be aware of those. It says you need to do customer due diligence. Really try and understand who your new customers are. CDD, customer due diligence. Due diligence means putting the work in first on your customers. Find out who they are. Be good at record keeping about your customers. Report suspicious transactions. So in order to know what's suspicious, we need to understand money laundering a bit more, and we'll go in that in a bit more detail in a second. Then it says you need to make sure that you look for transparency, particularly of legal persons. People try and set themselves up as companies, etc., and you don't know who's behind them. Well, if you don't, pull out of it, because you should. You want to be looking for transparency, not hiding behind some legal company or something. And then finally, it talks about international cooperation. Okay, so that means mutual legal assistance, extraditing people. Okay, so there's no hiding place for money launderers. So, the scope of money laundering next then. What are the typical money laundering offences? And so here's some. So here's a really key one, which you might be surprised at. Not appointing unless you're a sole trader, not appointing a money laundering reporting officer, because that means you're not taking it seriously, and that is a criminal offence in itself, unless you're a sole trader. So not appointing a money laundering reporting officer is actually a money laundering offence. Not having all the things that we know about in audit: risk management, internal controls. So risk management procedures, internal control procedures that all comply with money laundering legislation. So risk management with regards to money laundering. So you're thinking to yourself, am I in a business where people could money launder? Or is that business a place where people could money launder? Are there internal controls in place to try and prevent that? If they're not, that's a money laundering offence. Not doing customer due diligence. Not verifying new customer identity, which is basically the same. So new customer identity, which is basically the same as doing customer due diligence. If you don't do it, you are now committing a money laundering offence. No ongoing customer due diligence. Not enough just to do it at the start. Let's keep making sure that these people are who they say they are. If you fail to report, not a money laundering offence, a suspicion is enough of money laundering. So if you have a suspicion that the money laundering is happening, you must report it. But whatever you do, do not report it to the person you think is money laundering. Because if you do that, you are tipping them off. You are saying, look, I'm on to you, and they can then go and hide everything a bit better. So report it to an external body. Which brings me to tipping off, as I just said, is actually a money laundering offence. And that is when an individual who is suspicious, so you're suspicious, and you disclose that suspicion to the person you suspect, because you're actually telling them, I'm on to you, and therefore they will try and hide things, and that becomes a criminal act in itself. And that's really important for auditing, isn't it? So if you audit something and you think this is a really suspicious transaction, don't go asking management, okay? First of all, report it to your money laundering reporting officer. And of course, the one that we talked about before, tax evasion is also a money laundering offence, as is false accounting, okay? So make sure you learn all those. Learn them in that amount of detail. Okay, this is money laundering 1, and we go on to money laundering 2 on the other